Hello, this is Karthik Ahmed, lecturer in Evening College, Mangalore, and guest faculty, Government First Grade College, Kavur. Would like to welcome you all for this account revision classes. Today we are going to discuss about internal reconstruction. So, what do you mean by internal reconstruction? First of all, reconstruction means it is reorganization of financial structure. So that can be reorganization can be done externally or internally. So how to do reorganization externally? External reconstruction means suppose if there is any financial difficulties in the concern, then one company goes into liquidation and one more new company is formed. That is known as external reconstruction. But what do you mean by amalgamation? Amalgamation is nothing but two company coming together to form one more new company. Suppose A and B are coming together and to form new company, let us say C Limited. That is known as amalgamation. Then what is internal reconstruction? In internal reconstruction is nothing but it is no liquidation and no formation of a new company. So here there is no company going to liquidate or comes to an end and no new company is formed. That is internal reconstruction. So forms of internal reconstruction. There are two forms of internal reconstruction. That is alteration of share capital and reduction of share capital. So what do you mean by alteration of share capital? Alteration of share capital means it is nothing but you are altering the fixed status. Nothing but it's altering the fixed status of the company. How to alter the fixed status of the company? Suppose there is a paid up capital, you are altering the values of the capital. For this, you need to alter the memorandum of association. Similarly, there is a reduction of capital. What do you mean by reduction of capital? Reduction of capital can be done by converting the larger denomination shares into the shares of smaller denomination. So that is known as reduction of capital. So we are going to discuss this one by one. So first of all, alteration type. So in this first one is increase in share capital. Increase in share capital means nothing but here there is more shares for subscription. So that is known as increase in share capital. Similarly, there is cancellation of unissued share. So whenever there is a shares are issued, what is a journal entry? Whenever the shares are issued, there is nothing but bank account debit to equity share capital account. Similarly, there is cancellation of unissued shares. Suppose company has not issued the shares. That means what? You need to cancel the company need to cancel the share. So that is nothing but decrease in share capital. Consolidation of shares. What is consolidation? It is conversion of shares of smaller denomination into the shares of larger denomination. So that is consolidation of shares. Then subdivision of shares. Subdivision of shares is opposite of consolidation. So that is opposite of consolidation means conversion of shares of larger denomination into the shares of smaller denomination. That is subdivision of shares. Then conversion of shares into stocks. Suppose one person has 2000 shares of 10 each. So if he converts his shares into stock, then it is called as 20,000 stock. That is conversion of shares into stock. Then reconversion of stock into shares. So whenever you are converting your stock into the shares, denomination, same denomination need not to be mandatory. So that is one of the point. Then reduction of share capital. Main two type is alteration of share capital and reduction of share capital. So now reduction of share capital, how you are going to do it? Whenever there is a reduction of share capital, there is what consent of creditor is required. Without the consent of creditor, you are not going to reduce the share capital. Accounting treatment. Accounting treatment for reduction of share capital. First one is returning the part of share capital to shareholder. So whenever you are returning the part of share capital to shareholder, first is excess paid up capital returned. A company has excess paid up capital and it has to be returned to the concerned shareholder. Then what is a journal entry? You need to know the journal entry first before solving any problem. So first journal entry is share capital account debit to bank account. That is for excess paid up capital return. Then considering partly paid shares into fully paid shares. Suppose there is a partly paid shares. Suppose 100 rupees face value share partly paid up, that is 75. 75 rupees is paid, that means unpaid value of share is 25. So in case of such shares, what is the journal entry? Considering partly paid to fully paid, that is share capital partly paid account, debit to share capital fully paid account. Then reduction of share capital. This is very important journal entry in the case of internal reconstruction. So that is share capital account debit to capital reduction account. Basically, for all journal entry, capital reduction account is credited. So that is one of the things. So this is a very important journal entry. Next one, reducing the claims of debenture holder. So again, see, debenture account is debited and capital reduction account is credited. Debentures account debit to capital reduction account. Then reducing the claims of creditor. Again, creditors account debit to capital reduction account. Now, writing off, after doing all this, settling the claims of equity shareholders, settling the claims of preference shareholders, settling the claims of creditors, settling the claims of debenture holder, you are going to set off certain losses and fixed asset. So how to do that? So writing of fictitious asset and losses have excess value of other assets. So first you should calculate amount available in capital reduction account. So amount available in capital reduction account is nothing but credit side capital reduction account balance. So credit side capital account balance is debited while you are setting off losses. That is capital reduction account debit to profit and loss account, that is any debit balance, then to all fictitious asset, any fictitious assets are mentioned, that is also there, like again goodwill also comes, then two other assets overvaluation if any, then remaining balance finally transferred to capital reserve account, that is balancing figure. Then undervaluation of asset due to increase in the market value of that asset. So what do you mean by undervaluation now? So suppose machinery, value of machinery is 1 lakh and it is undervalued here by 20,000. Undervalued by 20,000 means now the value of machinery is 80,000. In that case, what happens? Concerned asset account debit to capital reduction account. So that is a one chain in the entry. If you see here, overvaluation, what happens? Overvaluation, that is capital reduction account debited. In the case of undervaluation, capital reduction account is credited. So after knowing all these journal entries, now we are going to see problems which are very important in nature from the point of view of examination. So now we are going to discuss 6 marks problem. First problem we will see the Mitra Limited having following paid up capital. First one, 30,000 preference shares of 10 each, 3 lakh here specifically given. Then 1 lakh equity shares of 5 each, that is 5 lakh, that is also mentioned. Then resolution was passed to reduce the shares as under. Preference shares are to be reduced to the shares of 5 each. Adjustment number 1. Then equity shares are to be reduced to the shares of 1 each. Adjustment 2. Then balance of capital reduction account is used to write off profit and loss account 1,75,000. Profit and loss account balance is given. Goodwill 2 lakh mentioned again. Land and building 1 lakh as required journal entries. So whenever you are passing journal entry, first thing you need to see first adjustment. So here first adjustment is about preference share capital. So I have already discussed this, that is journal entries for reduction in the shares of any kind of shareholder, capital reduction account is credited. So preference share capital account debit to capital reduction account. So here preference share capital. So if you see preference share capital is 30,000 preference shares of 10 each, that is 3 lakh. So number of preference shares we want, that is 30,000. So 30,000 into here reduced value of shares they have given. Reduced value of shares is 5. So paid up capital that is 10 each. So 10 minus 5, if you do 30,000 into 10 minus 5, that is 30,000 into 5, 1,50,000. Narration being reduction in the claims of preference shareholder. Instead of passing this journal entry, you can pass one other type of entry also, that is preference share capital account debit to preference share capital account to capital reduction account. So in that case, what happens? Preference share capital account debit 1,50,000, then to preference share capital account 1,50,000, and sorry, preference share capital account debit, that is 3 lakh, to preference share capital account, that is 1,50,000, then to capital reduction, that is 1,50,000. So that is about first journal entry. Instead of that, we are directly passing preference share to capital reduction account. Second, reduction in the claims of equity shareholder. Again, equity share account is debited, capital reduction is credited. Equity share capital account debit to capital reduction account. So here, equity shares, here they have given 1 lakh equity shares of 5 each, 5 lakh, but here reduced to the shares of 1 each. Reduced to the shares of 1 each means 1 lakh into 5 minus 1, that is 4 lakh, or else you can do equity share capital account debit 5 lakh to equity share capital account, that is 1 lakh, then to capital reduction account, that is 4 lakh. Also you can do. Then finally, setting off all fictitious assets and losses. How to set off all fictitious assets and losses? They have said balance of capital reduction account is used. So here balance of capital reduction means credit balance of capital reduction 1,50,000 and 4 lakh together 5,50,000 to capital P&L account, that is given 1,75,000, to goodwill account, that is 2 lakh, to land and building, that is 1 lakh, that is also mentioned here. If you can see 1,75,000, 2 lakh, and land and building is 1 lakh, and remaining balance, if any, is transferred to capital reserve account, that is balancing figure 75,000. Narration being fictitious assets and all other assets are written off. So this is the basic problem, comes under internal reconstruction, and you can expect this type of problem for 6 marks. Then now we are going to discuss 12 marks problem. So we'll see this problem. The balance sheet of Piano Limited as on 31st 3 2017 is as follows. So now liabilities side, if you see share capital, 30,000 share capital, preference share capital of 10 each, 3 lakh, 1 lakh equity shares of 5 each, 5 lakh, 14% debenture and creditor given. Asset side goodwill, land and building, machinery, tools, stock, debtor, cash, and profit and loss account is mentioned. On the above date, it was decided to reconstruct the company, and the following scheme of reconstruction was agreed upon. So one by one adjustment you need to see. First one, creditor. Creditor to accept a 14% debenture to the extent of half of their dues, and balance is paid after 6 months. That's the first adjustment. Second adjustment, preference shares to be reduced to the shares of 5 each. Third one, equity shares are reduced to the shares of 1 each. Debit balance of profit and loss account and goodwill is to be written off. That is mentioned. Land is to be reduced by 79,000, machinery by 40,000, tools by 48,000. So there is an adjustment in balance sheet also. RBD to the extent of 8,000 is to be created. Give journal entries and reconstructed balance sheet. So journal entry. Whenever you are passing journal entry, first you see this adjustment. First adjustment, creditor to accept a 14% debenture. So now creditor value given in the liability side of the balance sheet, that is 3 lakh. So half of the debenture, half of their dues they will accept creditor in the form of debenture. So half of their dues means 3 lakh divided by 2, 1 lakh 50,000 debenture. So nothing, so you need to pass one journal entry, that is creditor account debit to 14% debenture. Half of their dues are settled, that is 3 lakh divided by 2, 1 lakh 50,000, being half of the creditors is settled by 14% debenture account. Now, second journal entry, if you see, preference shares are to be reduced to the shares of 5 each. So now here, preference shares, they have mentioned 30,000 preference shares of 10 each, 30,000, that is 3 lakh. So 30,000 shares into 5, 10 minus 5, that is 5. So 30,000 into 5, that is preference share capital account debit 1 lakh 50,000 to capital reduction account. So here we have taken it together, preference share and equity share together to capital reduction, we have taken it together. So next journal entry, next adjustment, if you see, equity shares are reduced to the shares of 1 each. So here equity shares, 1 lakh equity shares of 5 each, that is 5 lakh. So here again 1 lakh into 1 lakh into 5 minus 1. 5 minus 1, yes, that is 1 lakh into 4, 4 lakh. So total balance transfer to capital reduction is 1 lakh 50,000 plus 4 lakh, that is 5 lakh 50,000, being the reduction in the claims of shareholder. Shareholder means preference shareholder plus equity shareholder. Then after passing these entries, final journal entries for settlement of fictitious asset and all other asset are set off or written off. How to written off? Using credit balance of capital reduction account. So if you see only one amount is given here, that is 5,50,000 capital reduction account debit to profit and loss account, that is given in the adjustment, that is debit balance of profit and loss account and goodwill is to be written off. Debit balance of P&L given, if you see here, 1,75,000. Then what else is written off? P&L. P&L and goodwill. See, goodwill is 2 lakh. Goodwill is 2 lakh. That is also given in the question. So 2 lakh is written off. Then land. Depreciate land by 79,000. Again, that is also mentioned. Machinery by 40. Tools by 48. Then RBD is to be created, that is 8,000. So last journal entry, capital reduction account debit, credit balance, two profit and loss account, two goodwill, two land, two machinery, two goodwill, two tools, and two RBD. Being fictitious assets and all other assets are written off. So this is about journal entries. Now you need to pass reconstructed balance sheet. So first we will see liability side. What and all item comes in the liability side? First is share capital. Share capital, reduced value of share capital. You are going to write. See, if you go through the adjustment, what they have said. See, reduced to the shares of 5 each. That means now there is only 30,000 shares of 5 each remaining in the balance sheet. So that you need to show 30,000 preference shares of 5 each. That is 1,50,000. The reduced value you are going to consider while writing balance sheet item. Then 1 lakh equity shares of 1 each. Again, equity shares adjustment 1 lakh to 1 each. So directly you are going to write 1 lakh. 14% debenture. 14% debenture, if you see the balance sheet, 2 lakh. 2 lakh is 14% debenture, but creditor what they have done, they have accepted 14% debenture to the extent of half of their dues. Whenever they are accepting 14% debenture, it is nothing but it is debentures are issued to the creditor. Debentures are issued to the creditor. So basically, so creditor, the debentures are issued to the creditor. So what happens here? 14% debenture 2 lakh plus new issue. It is a new issue of 1 lakh 50,000, total 3 lakh 50,000. Creditor. So you have added the new issue to the debentures. So from creditor, half of their dues are settled. So 3 lakh minus 1 lakh 50,000, that is 1 lakh 50,000. What about remaining item, the liability side? So there is no other items as such. So now we'll go to asset side, land. Land value, here if you see land value 4 lakh, 4 lakh value, but there is a depreciation amount. So that you need to deduct. That is in the adjustment 79,000. Similarly, machinery 2 lakh 50,000 minus 40,000, 2 lakh 10,000. Tools, again there is a depreciation value given by 48,000. So 1 lakh minus 48,000. Stock 1 lakh. Debtors 65,000, but RBD is to be created. That is given in the adjustment. So minus RBD 8,000. Then cash. So there is a cash balance given, yes. So that is 10,000. Then what about goodwill and profit and loss account? It is written off. So it doesn't appear in balance sheet. So if you make the total of the both the side, you will get 7,50,000 as the amount. So this is about 12 mark problem with some adjustment, but still it is not complicated as such. So now we are going to solve one more problem, that is 24 mark sum. So we'll see this problem 24 mark. The following was the balance sheet of Aroma Limited as on 31st 3 2016. So liability side, authorized capital, equity shares of 10 each, 2 lakh given. Similarly, there is a paid up capital. Paid up capital, 12,000 shares of 10 each, that is 1 lakh 20,000. But there is one adjustment. Minus calls in arrears. Calls in arrears 9,000, that is 3 rupees unpaid. What do you mean by calls in arrears? That is unpaid money. 3 rupees on 3,000 shares. So 1 lakh 20,000 minus 9,000, 1 lakh 11,000. Later and provision for tax is also mentioned. But in the asset side, if you see, there is goodwill, land and building, machinery, stock, debtor, cash at bank, preliminary expenses, and profit and loss account balance balancing figure that is brought forward. Profit and loss account brought forward, that is 22,000 minus profit for the year. So this is last year balance brought forward minus profit for the year, that is 1,200 given. That is total 20,800. So this is about question balance sheet is mentioned. So now directors have had a valuation made on machinery and found it overvalued by 10,000. It was agreed to write down this asset to its true value and to write off deficiency in profit and loss account, goodwill, and preliminary expenses by adopting the following. So there is one adjustment that we will come to know while solving journal entry. So now, what are the other adjustment? There is a forfeiture of share. First thing is about forfeiture of share. So when forfeiture of shares happens, whenever there is a non-payment of call money. So here non-payment of call money is there 3 on 3,000 shares. So there is a forfeiture of share. So whenever there is a forfeiture of share, you need to pass one journal entry. So that is one entry you need to pass. Then reduce the paid up capital by 3 per share. So that is as usual one journal entry. Then reissue of forfeited shares at 5 per share. So if you see here, paid up capital of 10 each is given, and out of that 3 is not paid. So basically here paid up capital is what? 7. 7 is a paid up capital. Now worth of 7 rupees per share. Now they are issuing at 5 per share. So in that case, what happens? Whether it is issued at premium or discount, here they are issuing it at discount. Because 7 rupee worth of share is now issued at 5 per share. Then utilize provision for tax if needed. Provision for tax balance is given 4,000. If necessary, you can utilize that balance. Journalize the above transaction and prepare capital reduction account and draw the reconstructed balance sheet. So you need to do all the things in this problem. That is why usually this type of problem appears for 24 mark. Now journal entry. First journal entry for forfeiture. So whenever there is a forfeiture of share, what is a journal entry? Equity share capital account debit to forfeited share, two calls in arrears account. So your first value you are going to write is equity share capital account debit. So equity share capital is shares of 10 each. They have given shares of 10 each, but here we are going to see only about 3000 shares because we are talking about forfeiture of shares. So only 3000 shares we are going to see. 3000 into 10, that is 30,000 equity share capital. Two forfeited shares, that is nothing but amount received or amount paid by the defaulter. So amount paid by the defaulter is nothing but that is 3000 into 7, 21,000. Amount not paid by the defaulter, that is two calls in arrear, that is being forfeiture. Two calls in arrear value, that is, what is the value here? I think there is a one mistake. What is the value? If you see, this is 9,000. It is 9,000. Two calls in arrear, that is 3,000 into 3. Next, next journal entry, reduce the paid up capital by 3 per share. So reduce the paid up capital by 3 per share. That is equity share capital account debit to capital reduction account. How they have got this balance? Once you see here, total number of shares here 12,000. Shares are not paid 3,000. So remaining share is 12,000 minus 3,000, that is 9,000 shares. 9,000 shares is to be reduced by 3 per share. So we are considering directly, they have given not 2 3 per share, here they have mentioned by 3 per share. So directly that is 3,000 into that is 9,000 into 3. 9,000 into 3, that is 27,000. They have given by 3 per share. So 12,000 minus 3,000, 9,000, 9,000 into 3, 27,000. Next, there is shares are issued at discount. That is nothing but reissue. Reissue of forfeited shares at 5 per share. Whenever there is a reissue of share, forfeited shares account is debited. So now if you see forfeited shares account debited, so here reissue at discount, so bank account debit 3,000 shares are issued at 5 each. So 3,000 into 5, that is 15,000. Then forfeited shares account debit, that is 3,000 into 2, 6,000. That is discounted value you are going to write here. That is 7 minus 5, 2. 2 equity share capital account total, that is 21,000 being reissue of forfeited shares. Next journal entry. Next journal entry is transferring forfeited shares balance to capital reduction account. So usually what we do whenever we are solving the sums of forfeited shares, we will transfer the amount to one account known as capital redemption reserve account. Here, same, it is similar to capital redemption reserve. We are transferring it to capital reduction account. So here forfeited share account balance, if you see credit balance of forfeited shares account, credit balance of forfeited share 21,000, first journal entry 21,000 minus debit balance of forfeited shares. Debit balance of forfeited shares here, that is 6,000. 6,000 is a debit balance. So 21,000 minus 6,000. So 15,000 is forfeited share account remaining balance, that is transferred to capital reduction account. This entry you have to pass. Then after doing all these things, what you are going to do? You are going to set off all other fictitious assets and losses. So this is the procedure of reduction of share capital or alteration of share capital. So capital reduction account, now we want credit side balance. Capital reduction account credit side balance, if you see 15,000, one balance is given here, credit balance, and one more credit balance is 27,000, journal entry number 2. So together 42,000. Provision for taxes, let it be as it is. If necessary, we will utilize that balance. For the time being, you write that, and this will be the balancing figure because credit side balance is more than the debit side balance. To goodwill account, 10,000 is to be written off. To goodwill is 10,000. See here, goodwill 10,000 given, that is to be written off. Similarly, now profit and loss account. Profit and loss account 20,800. 20,800, see here, that is given in the balance sheet. That is also to be written off. Then what happens? Then after that, two preliminary expenses. Any other fictitious asset, that is also to be written off. Preliminary expense 1,500 given debit side, that is asset side of the balance sheet. Then last one, two machinery, that is overvalued. Whenever machinery overvalued, reduction, capital reduction account debit, two machinery account 10,000. So now you make total of all these. 10,000 plus 10,000, 20,000, 20,000 plus 20,800, 40,800, then 40,800 plus 1,500, that is 42,300. So credit side balance is more than the debit side balance. So remaining balance, we will take it from provision for taxes, that is 300. This will be your balancing figure. Provision for taxes will be your balancing figure. So this is the last journal entry. Now you need to prepare capital reduction account. This is very simple. If you see your journal entries, you can easily do capital reduction account. How to do capital reduction account? See now, if you see the journal entries here, you will, wherever there is a capital reduction, to capital reduction means in capital reduction account, then buy forfeited shares. You buy forfeited shares here, it is given 15,000. Similarly, equity share to capital reduction, so buy equity share capital 27,000. Then provision for taxes also same thing, 300. Provision for taxes 300, that will be the balancing figure. And the debit side of the capital reduction, all fictitious assets are written off, and any overvaluation, that also comes under debit side of capital reduction account. Two goodwill, two profit and loss account, two preliminary expenses account, and two machinery. So here debit side balance 42,300, credit side balance 42,000. So provision for taxes 300, you will take it as balancing figure, because in the adjustment they have said utilize provision for taxes if needed. So finally, we have arrived for the conclusion part, that is reconstructed balance sheet. So reconstructed balance sheet, authorized capital. So directly now it is a paid up value of 10, 3 is unpaid. So now paid up capital value 7 worth of share. So 20,000 equity shares of 7 each. If you see the balance sheet, see this balance sheet, 20,000 authorized capital they have given in the balance sheet. So you are going to write authorized capital 20,000 into 7, that is the value 20,000 into 7, 1,40,000. Paid up capital. Paid up capital is 12,000 equity shares. That is also given in the liability side of the balance sheet. Or now of 7 each. Only paid up amount we are going to write, that is 12,000 into 7, that is 84,000. Creditor, that is also mentioned on the liability side of the balance sheet. Creditor is mentioned, see 15,425. Then what about provision for taxes? Provision for taxes value is 4,000, but we have utilized the balance that we need to deduct. 4,000 minus 300, 3,700. See 4,000 minus 300, 4,000 is a provision for tax value, and we have utilized balance of 300. So we are going to write deducted value in the balance sheet. Asset side, land and building as it is. Machinery, there is a overvaluation of machinery given in the adjustment, overvaluation 10,000, so that you need to be deducted, you need to deduct that amount then by 10,000. So machinery amount here 50,850 minus 10,000, 40,850. Then stock What about stock? Stock as it is. Debtors also. And there is no adjustment in debtors. Cash at bank. What about cash at bank here? Cash at bank 1,500. Cash at bank is 1,500. If you see, uh, that is the value. Then what about 15,000? They have what is the 15,000 from where it comes? Plus 15,000 new issue. This is a new issue of shares have done. See, that is shares are issued at discount. This value bank account debited to 15,000. So that amount you need to add to cash in hand 15,000. So 15,000 plus cash at bank given in the balance sheet 1,500, total amount 16,500. What about goodwill? It is already written off. Then what about profit and loss account? It is also already written off. So if you add both the side, you will get the total 1,03,120. So this is how you are going to solve the problems. We have discussed 6 mark problem, 12 marks problem, 24 marks problem of internal reconstruction. So part 2 of the video is also going to come up very soon. And in that video also we are going to discuss again 3 problems of this chapter. Then we will wind up this chapter because it's very simple in nature if you compare with other chapter, and whatever the problems we are discussing here is very important from the point of view of our examination. Thank you for watching. We'll see in the next video.